Good morning, everybody, and happy Monday. This is Monday, June 25th. Hope you guys had a wonderful weekend. We'll just jump right into it today. We got an economic calendar of one item here, and that is the new home sales for the month of May. We had in April 646,000 units analyzed for the year, and for the forecast, it was supposed to come in 668,000, and exceeded that to 689,000 for the month of May. That's a 6.7% increase in the month of May for new home sales. These are contracts on new homes, which is a phenomenal number, especially when you consider that from the beginning of the year to May, we had about a 0.5% interest rate jump in interest rates by about 0.5%. So interest rates, the rise in interest rates, not staving off the or deterring any of these home buyers out there. It's still a very strong number, and the media, who's usually trying to put water or blanket over these type of news, is even saying this is a very strong number. So, good news overall today on the economic news release scheduled. Now, one of the things that was mentioned last week, there was an economist for First American that came in, and he was saying that it wasn't interest rates are deterring buyers or manipulating these numbers. Interest rates have gone up. The biggest thing that's really deterring anyone from buying, if there is any reduction, is the affordability and the lack of inventory. There's just not a lot of inventory in most of the country here, and there's some pockets that are starting to show some inventory levels where there's more buyer or more seller demand. I mean, there's more. It's become more of a buyer's market, but in general, in the whole U.S., most of it is still a seller's market, and as a result, the lack of inventory and the affordability, as home prices keep rising, we're starting to see a few people come out. Like first-time home buyers, the overall share had dropped on those folks as they can't probably afford a lot of those homes, as most of them don't have the down payment to put down on these homes. So let's kind of jump ahead here to the headline news, and the stock market's down quite a bit actually. The Dow is actually down. As we looked, it was actually knocking on the door of 400. It's down almost 400 so far this morning. There's because a lot of it, of course, is more tariff talk. We have a lot of tariff talk going on here between U.S. and China and Europe, and of course, this is kind of spooking the markets more as the talk gets tougher and tougher. So we'll have to kind of see if this gets into be a full-blown trade war. Obviously, we got a difference in perspectives in this, whereas the U.S. is viewing it's unfair for us to get tax on exporting goods to other countries, whereas if we take in their goods in and we're not taxing those, so should be free for all basically. And if we're not taxing them, they shouldn't be taxing us. Is basically the perspective here. And obviously we have some differences between U.S., China, and Europe on that discussion. So also oil, OPEC came in and agreed last week, and then Russia came in and agreed along with it that they will raise their monthly production by 1 million barrels starting in July, so next week. That's obviously good news as oil prices have come down. That is on the heels of more sanctions being brought against Iran, and so because we don't have that production coming from Iran as the sanctions are hitting it, they need to increase that to meet world demand here. So let's go ahead and jump over at the bond market. As the Dow's in that way down here, as you can see, we're only up about 6 basis points. It doesn't translate to a improvement in our interest rates, but the good news, however, is we got the 50-day moving average here and 25-day moving average. We did say that it was going to have to be squeezed one way or the other. It looks like it's being squeezed to the positive side. Now, I don't anticipate this to last that long, at least this week maybe, primarily because the reason why I was saying before that I think it would get pushed to the lower side, and that was primarily because we're approaching July. July is the first month of the new quarter, which will be the third quarter, and as I've said before, the Fed is reducing they're doing call it the Great Unwind. They're reducing their portfolio of mortgage-backed securities and treasuries. So each quarter they're reducing about $10 billion, and when they did that in January as well as April, they rates took a little bit of a hike in those 2 months as a result of that, because there's just not a lot of demand. When the Dow's down almost 400 and we're only up 6 basis points. So that kind of shows you in itself that there's not a lot of demand, because typically if the Dow's down that far, we would have a lot higher spread. We would be seeing something like this where we're rising up a lot more dramatically. But right now there's just not a lot of demand for it as we're doing this great unwind. So, but the good news again, we got a bit of a ceiling, a little bit of higher ceiling. We got a lot of room here for this week to grow and get some improvement in our rates here, albeit perhaps a temporary. But again, a lot of this will have to play out and see how much more talk we're going to get in regards to tariffs and how that's going to affect the economy, and of course what the Fed says on this. So let's take a look at the Treasury. The good news again is it's breaking below this 100-day moving average, and look at the spread here. We got a lot of room here, which could help out interest rates dramatically if we close below this and this becomes a pretty strong ceiling or not. So again, we got a lot of room there. But again, I just have my hunch, my feeling is this is going to be a temporary one. It'll probably last just this week, and then next week, I have a feeling it'll probably go. We'll have swing the pendulum probably the other way a little bit, just due to again the demand that will be met for these investment products here. So that pretty much wraps things up. There's no really change in interest rates, even though we're only up about 6 basis points. Now, things could change throughout the day, so it's a good idea maybe follow me on Twitter here at Mike Bjork. I'll post the midday and closing, or if anything else that pops up, I will post that as well on Twitter. That way you can be fully updated as to the news of the day as we see some of these volatility or this volatile news, especially with the tariff talk. And now oil is kind of helping out, but tariff talk is what's going to really drive the markets. Stocks at more stocks than us, because it's not really affecting us as much. All right, you guys have a great rest of your day. Thanks so much for watching. I'll see you guys tomorrow. Bye-bye.